Alphabet is one of the most undervalued stocks right now, according to my research. So, understandably, I know a lot of investors are looking at Alphabet as a potential to be added to your portfolios. If that's the case and you are interested in Alphabet stock, I'm going to discuss a few factors that you need to know about the company's latest quarterly results after I evaluated the company's earnings call transcript and highlighted the biggest things that investors should know about. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alphabet said that they're investing in their AI capabilities across media buying, creative, and measurement. And I've said before, we believe that AI will revolutionize every part of the marketing value chain. And over the past quarter, we've seen how our customers are increasingly focusing on optimizing the use of AI. So this is specifically for their ads business, selling advertising to small businesses, medium-sized businesses, and large businesses, which is the vast majority, I want to say 80, 85, maybe a little more percentage of the company's overall revenue is coming from advertising. And so the easier it makes or the more effective Alphabet can make its ads for marketers, the more marketers will want to spend on Alphabet for advertising. And this is holistically, right? It's not just thinking about, well, if I spend $100 on advertising, what am I going to get back in terms of sales? What's my return on it? What's my return on ad spend? ROAS is something that marketers often look at, right? That's one factor, and that's one of the most important factors to be sure. But another factor is the ease of use. How long does it take me to initiate an advertising campaign? How long does it take me to update my advertising campaign? What are my customization capabilities? How often do I need to update, or can I set it and forget it? All of that is accounted for from a business perspective, from a small business perspective. Because if I can get a 20, 30% return on ad spend, that's a pretty good return on ad spend. But if that also means I need to spend several hours every month managing this advertising campaign, that may take away from the benefits of the return on ad spending. So just as important to the return on ad spend for Alphabet is the ease of use of the buying of advertising and managing advertising campaigns. And this is precisely a category where artificial intelligence can truly enhance the experience for marketers in a way that doesn't add very much to Alphabet's expenses, because this is software, this is AI, this isn't human labor that adds to their expense every quarter, every year. This is a category that I expect will generate significant returns for Alphabet in their investments on artificial intelligence. They also talked about YouTube and how, based on Nielsen data, on average, Google AI powered video campaigns on YouTube delivered 17% higher return on advertising spend than manual campaigns. And that's a big improvement, 17%, when you incorporate artificial intelligence to make your advertising campaigns more effective versus if you just rely on manual campaigns without utilizing artificial intelligence. And this is a big reason for marketers and small businesses and large businesses to utilize those AI powered campaigns because they can be more effective. They can incorporate more data into the decision making process and make decisions quicker than you can make them manually and give you better results. And so it's a no brainer for many small businesses to, or all businesses, I should say, to utilize these campaigns because it makes them more effective. And one of the reasons it makes them more effective is because of better targeting. They can really target the customers, the people that are most likely to be customers for a given business, and therefore focus their advertising campaigns on those core customer segments and not waste advertising spending on people that are less likely to be customers. Sticking with YouTube, creators are now prioritizing high quality viewing experiences that shine on TV screens, inspiring even more viewers to tune in. In fact, the number of creators making a majority of revenue from TV is up over 30% year over year. And I've seen that with the data, how YouTube has said that more and more folks are watching YouTube on their big screen TVs. And this wasn't the case. This wasn't as much the case 5 years ago, or definitely not longer than that. YouTube was primarily for people that were watching on their phones or tablets, but when people were watching content on the big screen TVs, they were more likely to choose Netflix or their traditional, TV provider. But now more so, as you can see from this data, people are watching more content on their TV screen. And so that's causing creators to now change the way they create to make their content better for viewing on larger TV screens. I know I'm making strategic changes to make my content more uh, higher quality when you're watching on a bigger screen. I've tested my content on a smartphone and on a big TV screen, and there are certain formats that work better on a larger TV screen, and there are certain formats that work better on your phone. And so now that I'm realizing and seeing this data that more of you are watching YouTube on big screen TVs, I need to adapt the way I record my videos so that they look better on the big screen TV, so that it doesn't look blurry, or so that one topic is not blurred out because it's so big on the big screen TV. And that shift in how creators make their content is going to make the content even more valuable on the big screen TV. And so YouTube is likely to gain an even greater market share on the big screen TV now, that creators like myself and the many, many more that are realizing that people are watching more on TV. And so they're making their content to look better on the bigger screen TV. Overall, I've been saying this for a while now, and I know I'm biased because I'm on YouTube, but I just think YouTube is the best streaming service you can have on the value proposition. You can get YouTube for free, of course, with advertising, and you can get so much content, and you're likely to find content that fits your interest, whatever your interest might be at the moment. You're very likely to find something on YouTube. And so, compared to other services, the value versus the cost, I think it's a no-brainer that YouTube is in first place. And all of the data suggests that YouTube continues gaining market share against rivals because of its strong competitive advantages. So for Alphabet investors, this is a segment that could very likely grow to become a 2x or 3x its current size over the next 5 to 10 years, with little added investment from YouTube or from Alphabet, because it's the creators that are bringing forth all of that content that feeds the ecosystem. YouTube's job is to continue making the platform accessible and continue improving the technology for both creators and viewers. And then all of the content creators will do their job and put on more content that will then attract more viewers, which will then attract more creators. And that positive virtuous cycle can feed on itself for many more years to come. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.